Hi guys, welcome to the Market Code Breakers. My name is Leon, where I break down one different asset, giving you the key levels and ranges for you to pay attention to going into tomorrow's session. Now, last week I brought to you levels on the Nasdaq, the S&P and oil, and each and every time I brought you those levels, you got very good reactions at those points. I did break down for you the best places where if price was going to continue in the S&P, I said it's going to react from the top of this level. It did exactly that. You would have netted yourself several hundred ticks. That was a very good trade opportunity. Similar thing on the Nasdaq that I broke down. I said to you earlier in the week that based on the information that I was reading on the charts, I was expecting price to go higher by the end of the week. Now, we got that, and my God, did it climb. So I did call out a potential swing trade opportunity on that before it happened. So if you want to see those videos, go back and watch them. They're very interesting. The levels that are on there, they will still be vital going forward in the future when price breaks back down and gets into those regions. Those levels will still become important. You will see that. So today I want to break down the Nasdaq even further for you. I want to give you some key levels up at the top end of the range where we're at right now, where you can expect to see some reactions from. Now, last week I broke down oil for you. So before I give you the Nasdaq levels, I want to review what I give to you on on Thursday going into Friday's session. I want to review that information and see what trade opportunities you could have got based on the levels that I give you on Thursday. So let's get into that, guys. So this is the ES. I want to get oil up. So we'll get oil up because oil was the last range that I broke, the last asset that I broke down for you. So I want to review that before we go on to the Nasdaq. So in that video, price was in this region. Now, they've been playing this red range for most of the week. Let me just put it on the 5-minute chart so you can perhaps see it a little bit better. So they've been playing this red range for some time last week. So from Tuesday, Wednesday, Thursday, and each time they rejected the midpoint of this range. Now, I think this is a very strong signal that when price gets up into that region again, we start to play that red range. They will complete that red range and they will break higher into these ranges above. So there's a potential for swing trade opportunities. However, based on where we're at right now and what happened on the Friday session, there's something very important that happened, and they left this green range down below incomplete. Now, there's two things that could happen. This could simply be a signal that, okay, price is going to rip up now. It's going to complete that red range that they've been working all last week, work itself into these ranges, and this is a signal that perhaps by the end of the week that price is going to work its way back down into this region. Or there's the chance that this green range, what I would like to see personally, to signal that price doesn't want to go any further down, then I'd like them to complete this green range. I don't want them to leave anything incomplete. I don't want them to be saying that they've got incomplete business to the downside before they make the move higher, because if they make the move higher, then that move won't sustain itself and price will come back down and they will complete this business that they've left unfinished down below. So key areas to pay attention to tomorrow going into oil. I want you to mark off this green range from 70.31 to 69.76. Use your Fibonacci tool as I show you in every video, and you want 0, 0.5 and 1 selected, extend lines right, and you want the background highlighted just so that you can see it. And when you have these ranges highlighted in such a way, you'll start to see them working ranges. Now you can see on Friday what we got with oil when we broke into this range. This looks like it was like they really wanted to go lower because they broke into this range. They broke back up to this yellow range and it looked like they rejected it. But then they came down to the midpoint of this green range and they rejected that also. So there's some couple of good scalping opportunities here really in oil where you could have taken some scalps based on this rejection and targeted this green range. Now you would have had to have been very careful with it. You wouldn't really wanted to target anything lower than this midpoint of this green range on the off chance that they don't want to fulfill that range, because I would expect more than what we got. If they wanted this green range, I'd expected this initial to break down to the bottom of the green, react from the highs, and then it might have taken it to the lows. But instead, it reacted from the highs, the lows of this yellow range, broke down into it, and then rejected it from the midpoint. So this is key because it signifies that they've got unfinished business in this area, but also they signify that they've got unfinished business in this area. So it's a little bit of a double-edged sword right now with oil. Do they want to go up or do they want to go down? Now, if they was to make the, like I said, if they want to make the climb up now and break into these regions, these are potential areas where you might, if you're a swing trader and swing trade is your thing, then you know that they've got unfinished business down in this region. So that might be a potential opportunity, but I wouldn't recommend just taking that trade. I will update you with how I see price developing throughout the week. But yeah, key areas to take away. I want you to mark off this green range, this bigger red range, because they've been playing this all of last week from 70.31 to 71.81 being the lows. The midpoint already selected via your Fibonacci tool, and then these other ranges in between. I did tell you the levels on these. If you want to find out exactly what the levels are of these ranges in between, where you might get scalping opportunities on the way up between the levels, then go back and watch last week's video. But for tomorrow, the Nasdaq, there's two key ranges that we're in right now, and these were both set on Friday, okay? And there's another range that was set on Thursday, which is lower down. So to start with on the Nasdaq, these are the key ranges that you want to pay attention to, because you will get action from these levels. Now, depending on what happens, which I'll break it down for you, the scenarios that could happen, depends on the type of trades that you really want to be taking. Having access to these ranges and these levels gives you the best opportunities of the day, okay? They do give you the ability to take the best trades with the best entries. However, it does take an understanding of these levels and how they behave and how they treat them. Because what they do is they set these ranges, and then later on in time, whether it be a couple of days later, a week later, when they come back into these ranges, they start to work them, and you'll see them precisely bouncing from the mids to the lows, from the highs to the mids to the lows. Like I'll show you what I mean now. So on Friday, price finalized at the highs of this red range. Now, during the New York session, you can see what I mean here. They broke into this purple range. They reacted from it with a wick touch. Then they broke into the highs. They broke back into it to the midpoint, back up to the highs again, back down to the lows. So New York and the back end of New York session was playing this purple range. So this is what they do. This is the type of behavior that you do. And you get these wick touches as confirmations. Okay, this is on the 5-minute chart, but if we're looking at it on the 1-minute chart, you'll get these very precise wick touches. Now, these are very important. Now, I've got an overlapping range here, and I'm not quite sure which one is the right one. Okay, this one is the wrong one, so we'll get rid of that one. And you'll get these very precise wick touches. So the confirmation that this purple range was coming into play on Friday in the New York session was that when they broke into it, they've retraced to it, and then they continued up and broke the highs. Now, once they broke back into the purple range, again, they retraced to it with this very precise little wick touch. Now, it looks insignificant, but it's not. Okay, it's very significant, because these are the little clues that they leave behind when they're playing a particular range. So when I'm telling you to mark off these ranges, this is the type of clues that you're trying to look for them signaling that those ranges are now in play. So had you seen them break back into this purple range with this little wick touch here to the tops, you'd have been very good then to run a short and target the lows of that range. And that trade was the most readable trade of the day based on these ranges. And that would have netted you 150 ticks. So, you know, it was the best trade. It would have had the least amount of risk on the table. And when they make promises via these ranges, they always fulfill them. And this is why these ranges are important. But it's very difficult to read these ranges. This is why I try to break it down for you by giving you the key levels and the key areas that you need to pay attention to going into tomorrow's session. So let's get these ranges marked off for you guys, and I will explain to you what I expect to see. So the first range is this purple range at 21,250 being the highs to 21,211 being the lows. Second range that I want you to mark off with your Fibonacci tool is this red range, and this red range starts at, I'll just click here, 21,232 down to the lows of 21,155. And then if we do get price breakdown, I'll explain what I expect to see happen. But then you need this further range that's lower down marked off. That starts at 21,110 to 20,982, 20,982. Okay, so mark off those three ranges, guys, and I'll explain to you what I expect to see going into tomorrow's session. Now, as with the videos last week, I said if they want to move price higher, then what you will see is you will see price break above. It'll break above this red range. It'll probably retrace to this red range, signaling that they don't want this red range. Now, they could react from the top of this purple range, which might be a signal that they play in this purple range. So pay attention to this. If they break above it and they start to break above this area here, what I would expect to see is a retrace to the top of this purple range, and then they'll shift out to the upside. That's if they want to go higher. What they are doing in that scenario, when they're communicating this, they're not communicating to you and me. They communicate to the other banks, the other institutions, what their intentions are, and they do it all via these ranges. So if they were to do that, then they would be signaling to everybody else that they've got no intention of playing this range any further, and that they want price to go higher. How high, I can't tell you because there's no information. At this point, then you're in no man's land. You've got to make your own decisions on where you'd be happy to take your profits when you start to see slowdowns, reactions, all that type of thing. But that's if price wants to go higher. That's the type of situation thing that you were going to see from these ranges. Now, the other scenario is that New York, this range was set in Asia. New York played this range. It was actually set in London, but New York played this range. Now, Asia, with them already having been in this range for the whole of the session yesterday, as you can see, this is all that there was. There was all in this region. Maybe they want, with them opening after rejecting the highs of this red range, maybe that's a signal that they want to play this red range. So this red range might be very important in the Asia session. So make sure you get it marked off. And you'd be looking, if you get any clean reactions from the highs, you might be okay to target the midpoint as a scalp short. If they break down, maybe you get a reaction from the lows to the mids. Be very careful at the midpoints because it's very hard. Sometimes it can be very hard to pick a direction at the midpoint. So realistically, you want shorts to be placed around the highs of the range and the longs to be placed around the lows of the range after seeing reactions. It's vital that you wait to see reactions. But down below this red range, if price was to break down below this red range, then you might get a similar thing as I said above, where price breaks below it, retraces to it, and then I expect it, if that happens and they start to work their way down again, this gap will get cleared. I'm certain of it. Now, if you're looking at this price broke down below it in the London session, well, this range wasn't set. This is a New York range. This was set by New York. So this range wasn't even set by then. So this wasn't a dead gap at that point. Now it is a dead gap. Now this is a gap that I expect, if the price breaks down below this red range, I expect that gap to get filled. So that's a potential another opportunity based on these ranges. And again, if they break down into this purple range, you know, you want to see confirmations that they're playing this range. So you'd maybe see break to the midpoint, back up to the highs. If you get a reaction at the highs again, price starts working its way down, you might be good to target the lows, but be very careful. If you get a stalling at the midpoint or you get a reaction at the midpoint, you'd be wanting taking profits at that point. But this is the type of behavior that you might start to see if they break down into the purple range. So those are the scenarios, and those are three ranges that you need to pay attention to on the Nasdaq in tomorrow's session. Now, anything could happen. You know, if they want to go up, I've told you how I expect them to do that and how you would be able to visualize. If you would be able to see beforehand if that's their intentions, they will make it clear that that's their intentions by doing the retrace continuations from the highs of the ranges, or they'll break down and they'll just play those ranges. Now, I'm expecting Asia to potentially play this red range, so pay close attention to that one going into tomorrow's session. Yeah, so if you like what you see, guys, and you want to carry on learning on how the banks and institutions are plotting these ranges and how they're using them to manipulate price and how they are communicating their intentions via these ranges, then please subscribe to the channel. Share this with your friends who are also traders. You know, I'm sure they will benefit from this. Just last week, the amount of trades that I managed, that you would have gotten from these levels was, you know, people think that the level of precision that these ranges give you doesn't exist in trading, but it does. It's right here, guys. And I'm giving you the best information that the market has to offer because it's the levels and the ranges that the banks use. It's as simple as that. The evidence is there when you see them, when you plot them off and you see the reactions that are happening at these points. You start to see, okay, this is what they're doing. Okay, so pay close attention to the levels that I give you every single day. And that's it, guys. Thanks for watching. It's been a great video. Don't forget to like on your way out. And I will see you again tomorrow. Tomorrow, I think I might go through oil. I'll give you some key levels on oil because I didn't break down oil for you. No, not oil, gold. I always get them two mixed up. I'll give you the key levels on gold for you to take forward into Tuesday's trading session. So pay close attention to the levels that I give you for gold tomorrow. Okay, thanks for watching, guys. Bye for now.